Hello, everyone. Welcome to part two of the five documents every new accountant must master to survive in their first accounting job. I said that. So, let me introduce myself again. My name is Blessing Ikama, also known as Nero. I'm the founder of Axfair of Ash, an independent bookkeeping and pre-audit support firm. What do? We clean up, we arrange messy records for organization and also assist auditors. So in order to ensure transparency and in order for them to make independent decisions or independent view of the company. But the most important thing is that if you know your books are messy, scattered, incomplete records, to make audit easier for you, you can send us a mail or you message me, or you can even drop a comment on this my video concerning that. Now let's go to the main reason why we are here. In our last video, we talked about the five documents. Number one was invoice, number two, receipt, number three, payment voucher. And now what we want to talk about is the bank statement. What is a bank statement? A bank statement is a document that shows all the transactions that run through a company's bank account. Yes, with the bank statement, you can confirm your cash balances, you can detect errors and frauds, and also the bank statement is used for what? Financial accuracy. Yes, I can say that. What contains the bank statement? What is in the bank statement is we have our withdrawal, which is transfers, we have our deposit, money coming in. Yes, we have our bank charges and we have our standing orders. So usually new accountants always say your cash balance must be same with your bank balance. This is rarely true, but it is possible. So along the line in this our series, there is a video that will be talking about bank reconciliation. But before you understand what bank reconciliation is, I think you need to understand the part bank statements play in that. So our bank statement is very important. So as an accountant, your bank statement shows the money that went through your account in and out. Yes, confirm accuracy. It means you need to confirm it with what you are posting. Any money that is not documented and is in the bank statement is questionable. You need to confirm it. So that is all for the bank statement. Now we are going to move to the next. For the last document you must master as an accountant is supporting documents and expense. I hope you guys are seeing it. So expense receipt. Expense receipts and supporting documents. I will just explain for you. Expense receipt includes your fuel receipt. After buying fuel, they give you a receipt. Your utility bills, yes, your maintenance invoice. For those are expense receipt that you need to know. Then for supporting documents, the supporting document shows, for example now, I would say in a firm, some firms like expenses that are internally, like the purchaser will need to buy something, so they can't get invoice, receipt and all that. There should be a requisition requesting for those things, which is approved by one of the heads. You can write a requisition, they approve it, then from the heads it comes to the accounts department. You can work on such documents. Those are included in supporting documents. You can call those things supporting documents. So expenses, as an accountant you need to understand that expenses must be business related. It's not for personal use. Nothing concern you with whether somebody want to do personal use. Expenses must be business related. The amount must be reasonable. You cannot tell me that you want to buy bulb, 5 bulb, you are calling 50,000 for me. As how now? No, it does not make sense. The amount need to be reasonable, and that expense needs to be authorized or approved. You need to get that. The expense needs to be authorized or approved. Now I'm going to discuss how these documents work. We've mentioned invoice, receipt, payment voucher, bank statement, and supporting documents and expense receipt. Now let's start. This is an invoice. An invoice comes, an invoice requires payment. So an invoice, it requires payment. We create the payment voucher. From the payment voucher, there is a receipt. This receipt proves that a payment was made. Then it now lands in the bank statement. This bank statement shows that the payment that was made, this is the final landing point. So understanding this way, like understanding how these documents connect and how it works, will enable you, like it will make your accounting work easier. It will make you understand your posting. Your posting will be easier for you. Another thing I want to say is that as a person who runs a pre-audit firm, weak expense documentation is one of the biggest issues in organization. So if you know your organization is having this issue and you don't know how to settle it, you can send us a mail. Our mail will be on our description. You can send us a mail, askspherehub@gmail.com, and we'll reply to you and we'll get started. So if you know you want to solve that problem in your organization to avoid audit palaver and all that, even as an auditor, if you're watching this video, you can also contact us. Then I think I will still drop our business line where you can also send a message. So this is how it works. Now let me go to the next before I end. So now I'm going to be talking about the common mistakes accountants make. I'll just list four based on this video. Number one mistake, posting transactions without documents. Like Baba, aunty, why are you posting without documents? Without nothing supporting it. You are just no, don't do that. Documents must be complete. From the invoice to the receipt, the payment voucher, the supporting documents, they must be complete before you make it, because those documents, why they must be complete, sometimes there's a refund. There's some organization that does retirement. After you buy stuffs, you retire those stuffs. Like you come and tell us what we gave you, the amount you bought it, and if any amount is remaining. So if any amount is remaining, you know how to treat your refund. So posting transaction without document is wrong. Accountants don't do that. Number two, ignoring approval signatures. You saw documents, you didn't see any approval, even if they don't sign. Maybe your organization deals with email approval. You didn't see any email regarding the person that's supposed to do it say approved. Don't ignore it. That is a red flag. Pick it out. That will save you. I'm telling you something. That is going to save you. No signature, no approved. My dear, dump that document. Number three, confusing invoices with receipts. Accountant, you are an accountant, you are not a market seller. Please, if you have not watched part one, watch part one and understand. Invoice is different from receipt. Invoice is issued by a seller to request payment, while receipt shows like a payment has been made already to the seller. So please, this concept, invoice and receipt, don't confuse yourself. Number four, not being able to reconcile with bank statements. Accountants find this difficult. You see, reconciliation is a problem. Reconciliation is like hard work. A lot of accountants till now don't know how to do reconciliation. Please learn it. In my series, as time is going on, I'll be teaching about bank reconciliation. But please, these are common mistakes accountants make, and you should dodge them. Be able to reconcile your ledger or your cash book with your bank statement. Now, when you do this, when you avoid these mistakes, it builds trust, like trust with your employees or with your clients, and it also increases your confidence. So I'm going to be listing out, like I'm going to just give my advice to accountants. When you master these five documents I have listed and you watch this video, auditing will be easier, posting will be easier. It is going to build your confidence as an accountant. So please, Don't just watch this video. I think you should learn something from this video. So we've come to the end of this video. If you know you found this video helpful, don't forget to like, subscribe, and put on the notification bell. So by the time I post another video, you are going to see it. And please don't also forget to share to new career accountants who are just starting their accounting journey. Thank you very much. In our next video in this series, I will be teaching about how to know your chart of accounts. I will be giving an explanation on that. Aside that, I want to tell you something. Thanks for watching. See you.